In 1926, the Royal Commission on Indian Currency, also known as the Hilton-Young Commission, recommended the establishment of the Reserve Bank of India, RBI. After independence in 1947, to serve the needs of a fledgling nation emerging from 2 centuries of colonial rule, the RBI was nationalized in 1949. As a full-service central bank, RBI is playing a crucial role in the management of Indian economy over the last 9 decades. In 1935, the RBI took over, and since then, it has issued currency notes ensuring their quality and security. To enhance the quality of currency notes, the RBI implemented a clean note policy in 1999, establishing state-of-the-art note printing presses and mechanized processing system. From importing all the components of a note earlier,
RBI has now almost achieved
100% self-sufficiency with in-house ink and paper manufacturing as well as printing of notes. The establishment of Bharatiya Reserve Bank Note Mudran Private Limited brought about self-sufficiency in note printing, ensuring the availability of high-quality currency. Since its inception, the Reserve Bank of India has played a crucial role as the banker and debt manager of both the central and state governments, overseeing various financial operations and transactions.
the reforms undertaken both in the debt management framework as well as in the government securities market has resulted in successful management of large borrowing program. From central bank funding budget deficits, we now have a system where all government borrowings are funded through auctions at market-determined rates. Reforms such as introducing new instruments, expanding the investor base, strengthening market infrastructure, etc. have further strengthened the G-section market.
The recently launched Retail Direct scheme provides a convenient and accessible platform for individuals to directly invest in government securities, fostering financial inclusion and democratizing investment opportunities. Monetary policy stands as one of the cornerstones of the RBI's functions derived directly from its founding mandate. India's monetary policy framework under RBI has evolved over the decades, from monetary targeting to a multiple indicator approach and ultimately to flexible inflation targeting in 2016. RBI's role in monetary policy management is backed by rigorous research, surveys and data analysis with aim of maintaining price stability while fostering economic growth and ensuring financial stability. The RBI stands as a cornerstone in the development of financial markets, especially the government securities market, shaping the landscape of India's economic infrastructure and providing a diverse pool of investment options. The end of British rule, India faced significant economic challenges, including depleted foreign exchange reserves. To address these challenges, India implemented regulations to manage foreign exchange transactions, culminating in the Foreign Exchange Regulation Act of 1973. During the 1990s, India transitioned to a market-determined exchange rate regime and adopted current account convertibility, paving the way for further liberalization, making a significant shift in RBI's role from regulator to facilitator, enabling smoother management and accretion of forex reserves. Timely and strategic intervention in the forex market by RBI prevents excessive volatility in the value of the rupee, fostering stability, reinforcing confidence in India's financial markets. In 1949, the Banking Regulation Act was enacted, empowering the Reserve Bank of India to regulate and supervise banks, inspect their operations, and authorize the licensing of bank branches. Over the years, RBI's oversight has been extended to
non-banking financial companies,
cooperative banks and other entities to ensure comprehensive supervision and credit distribution to all sectors, including thorough targeted lending. To align banking operations with national policy objectives, a total of 20 banks were nationalized in 1969 and 1980, ensuring greater focus on development-oriented lending. This was followed by thrust for improving credit flow to rural and urban areas through regional rural banks and support for primary, that is, urban cooperative banks, and introduction of lead bank scheme in 1969. In 1972, priority sector lending guidelines were introduced to channel credit towards priority sectors, fostering inclusive economic growth. Since 1994, RBI has issued licenses to new age private sector banks, ushering in an era of competition and innovation in the banking sector. Through a prudent mix of on-site and off-site supervision and by implementing various RegTech and SupTech initiatives, RBI has ensured that banks adhere to prudential guidelines and best practices to strengthen their resilience and meet the evolving needs of the economy, fostering a robust and dynamic banking sector. In the ever-evolving landscape of banking, ensuring consumer protection has been a paramount priority for the RBI. In 1995, RBI introduced
Ombudsman Scheme,
offering customers an avenue for expeditious and cost-effective resolutions of
grievance
against banking services. The RBI Integrated Ombudsman Scheme was launched in 2021, embracing technology to provide customers with a user-friendly platform for lodging grievances, adopting a One Nation, One Ombudsman approach. Payment systems serves as the lifeblood of an economy, ensuring the flow of economic benefits to every segment, including the bottom of the pyramid. The RBI has established state-of-the-art payment systems that are affordable, accessible, convenient, safe, and secure. The RBI has spearheaded the establishment of cutting-edge payment systems, driving rapid growth in digital transactions and earning international acclaim for India's achievements in this space. Recent initiatives like the JAM Trinity Centers for Financial Literacy and branchless banking through the business correspondence and branchless banking through the business correspondent model have leveraged technology to expand financial access and empower underserved communities. Innovations in financial services have been a cornerstone of the RBI's efforts to foster responsible innovation and promote efficiency for the benefit of consumers. The RBI's regulatory sandbox provides a platform for innovators to propose solutions within thematic cohorts, ensuring a targeted focus on innovation and research in the fintech space. In a landmark move, the RBI introduced the e-rupee, a central bank digital currency, to provide a digital alternative to physical cash. The RBI stands as a beacon of institution building, nurturing various entities to meet the evolving needs of the nation and drive targeted development in niche areas. Throughout its 90 years journey, the RBI has been at the forefront of crisis management, navigating through turbulent economic times with resilience and determination. Through its unwavering commitment to stability, trust, and innovation, the Reserve Bank has safely steered the nation through crisis, embodying resilience and fortitude.